Hey everyone. Some investors are anxious about markets right now. That's because equity indexes are reaching new highs almost on a daily basis. Skeptics are cautious and some are even more rattled by the new administration, which prides itself on being somewhat unpredictable. It's true that stock prices have risen faster than corporate earnings for several years, and that makes them more expensive. It's true that uncertainty rattles the market, and it's also true that there was a lot of investor euphoria as soon as President Trump took office, and that was in anticipation of the changes he championed, like infrastructure spending, tax simplification, and regulation reduction. While those initiatives would stimulate the economy, they may take longer to implement than investors expect. And these are all good reasons to be somewhat cautious. I understand that. In addition, there's always the threat of a trade war, and while the odds of that happening are pretty low, it's still a possibility. So the question that you have to ask is there any good news out there? Well, yes, President Trump will likely be able to lower corporate taxes, cut some regulations, and get some money spent on infrastructure in the near term. And also the economy is strengthening while corporate profits are rising. And taken together, that's actually a lot of good news for stock investors. But because of all the uncertainties I mentioned above, we have to expect volatility in the near term, and it could last quite a while. So what's going to happen in the market now? Of course, I don't know because I can't predict the future, but I can promise you that the market will drop. There's no question about it. The only question is when and how much. You may find it interesting to note that according to Investor Business Daily, there was only 1 year over the last 89 years when the S&P 500 didn't drop at least 4.4% from its intra-year peak. And this may also surprise you, but in 2016, that happened 4 times, even though the market ended up with a healthy and positive return for the year. And it actually gets bumpier. Historically, 75% of the time, the market drops 10% or more during the year, from a high to a low. And the median fall was a staggering 13% even during bull markets and growing economies. The good news is that most of those drops were short-lived and the result of a specific event. Of course, that's no guarantee of future results. But if you look at history, it's somewhat comforting. Look at the chart above. It shows the magnitude of intra-year market drops since 1928. It's hairy to say the least, and to expect that wild ride to smooth out now is just not realistic. Over that period, stocks returned over 9.5% per year on average. Again, no guarantee of future results, but still, during these years, it was a terrifying experience at times. No way around it. Focusing on more recent history, there were steep, albeit short-lived market drops in October of 2014 and in January of 15 and 2016. And we saw wild market movements last year during the election and once Brexit passed. So should you be worried about the market? Of course you should. There's always another market correction coming. And this is a huge problem for short-term speculators, but it's not a problem for us because we're long-term investors. Just to solidify the point, let's look at a chart created by J.P. Morgan. It's one that I've shared with you many times before. The gray bar shows the absolute return of the S&P 500 each year since 1980, and the red dot below shows the intra-year drop. You can see that equity declines are inevitable and part of the landscape for investors. What I want to get across today is that when we do see the market correct, as it surely will, it doesn't necessarily mean it's the end of the world or the end is near. All it will mean is that the market is doing its thing like it always has. To be sure, I'll continue to monitor the situation and adjust your portfolios as necessary. But we can't expect growth investing to be a one-way direction. And the people who overreact to market drops, even though these drops are quite natural, are usually the ones who pay the biggest price. Let me know if you have any questions. I'd love to hear from you and connect. Thank you very much.